Hey guys, what's happening? What a crazy morning. What a crazy way to start the week. This is actually the 11th anniversary of the recent bull market. This bull market that we've been in started 11 years ago today. And how did we celebrate it? We started out by S&P triggering a circuit breaker halt. So for 15 minutes after the open today, we just sat and listened to crickets. But that's not all we did. The Dow was down over 1,900 points. The oil market had its worst day since 1991 because the demand is low. The travel, everything has slowed down tremendously. The demand is low. Saudi Arabia, I think, is flooding the market. So that's going to kill oil prices. It's good for us because in the short term, because we're going to pay less at the pump. But once the demand increases, the prices are going to get blown way out of proportion. So it's kind of a short term thing, but I think it's going to blow up in our face. The treasury bond rates are at its all-time low. The first time it's ever been below 1% in the history of the United States. And we are about 2% away from an actual bear market triggering. Now, a bear market is triggered once you hit 20% below the all-time high. And I think we were around 18% is what we figured. I'll look more into it tonight, but that's kind of the general consensus. So that means we're 2% away from going into a bear market. So that's how we celebrated the 11th anniversary of this bull market. We almost lost it. Now, and and like I was saying this morning, if you're in chat, that if you haven't been through a big gap down or the market selling off before, the best thing to do is just sit out and watch. Because technically, all I'm going to do is exercise my strategies in the market. I'm going to sit back and wait for the market to give me opportunities. And that's pretty much what we did today. Unfortunately, I just had bad luck, just like I had last Monday. My two stocks didn't hit my first target. It was just bad luck. It missed it by a couple of cents here, a couple of cents there. And when you look at what we did today, it is kind of more of the same. So the trade that we had today was on Roku. Now, I did say in the morning that whenever you have a market gapping down, you have a big gap down like this, and all of the stocks or most of the stocks are selling off, they're going to pretty much have moved their ATR pre-market. They've already traded it. So looking for it to trade to the downside at the open didn't really make much sense. Now, are all stocks going to go up at the open? No. I'm talking about the majority. I'm talking about 85, 90%. There's always going to be the other percent that just goes against the grain. So I wasn't looking short at the open. I was only looking long. And I think on our watch list, we didn't really have a traditional watch list. So I looked for a potential quick flush on Roku at the open. I thought if it does anything, you'll get a quick flush and then a bounce. But I can't really trade that. Not in a day trading strategy. It's not a strategy. But I was kind of looking for that. We didn't get that. We got a little sell, and then it just started ripping up. Everything started showing incredible strength. And so we were looking at Roku and we were looking at Twitter. And those were the two that we were looking at. And both of them made pretty decent moves to the long side. And you can see here, we had the gap up. We had to halt. So what I had to do is kind of wait. I wasn't going to get it on the break right here because we had the 100 period moving average. We had this daily level right here. Once this candle closed above it and then we made a new high, I got in. That was the trigger. We ran right up to my first target. I really ran a little bit past it because I was looking for the halfway point between where we are now and the 200. But on the same candle, not long after I took profit at 9:57, about a minute and a half later, this thing had sold all the way back down and stopped me out at break even. So I got my first target, and then that was that. Now, yeah, I could have gotten in. Again, I could have remounted this thing and rode it, but I had convinced myself that I wasn't comfortable in the market. Now, maybe I wasn't, and maybe I talked myself into being uncomfortable in the market, because normally on a normal day, I would have remounted this stock, got back in it, and rode it back up to the 200, and then left someone, took some more profit here, and then would have been looking for the move up here. Now, yeah, I would have gotten stopped out here again, but guess what? Another remount and do the same thing over again. That's my MO. But I let this stuff get into my head, and it cost me some profit today. And one of the big things that we have to do, I don't care whether the market gaps up or down. Some people ask me, what are you going to do? The market gaps down. What are you going to do if it gaps up? I'm going to do the same thing I do every day. I'm just going to be more aware that if it gaps down as much as it did, I'm not going to look short. That's just not the smart thing to do. Based on the experience that I have, when you get a big gap down like that, and most of these stocks have already traded the ATR to the short side pre-market, 9 times out of 10, you're not going to get anything at the open. You may get fooled. You may get popped out, and then the market turns and goes long. Then, later on in the day, once it's made its run up and it starts to lose steam, then you can short it. But until then, you have to continue to play and trade what the market is giving you. So we got a little piece here, and the market went up, and here we pulled back. And this was about the time I had to go to the doctor. And so I was a little irritated because it's like whenever I have an appointment, things are on the verge. Seems like they're on the verge of setting up. If I don't have an appointment, we just sit here and twiddle our thumbs for a while. But this one, I thought was going to set up, and I jumped in too early. I got in the car, logged in, and saw this, and I'm like, oh, I'm going to jump in now. Because driving down the road, on the highway, I'm not going to be able to pull over and get in. So I made the cardinal sin and jump in before the setup. But even if I waited for the setup, I would have been in because I would have gotten in on this candle. So either way, I would have been stopped out on this. So even if I got in early, whatever, I should not have taken my laptop with me. I need to work on just leaving it here and waiting until I get back. And so once I got to the doctor's office, I looked at it, made sure it had stopped me. I didn't know where it went. It had stopped me. I made sure I was out. And so closing it, for some reason, this laptop has a touch screen and it's really sensitive, which is crazy because it's a really cheap, laptop, something I can just put under the seat or whatever. And it's really, really sensitive. And this isn't the first time that this has happened to me. What concerns me is that this stock is on SSR and it's shorted and I got short. So, I don't know what button is hitting or whatever, but it hit my 300 share short button, or either I had 300 shares in the thing from because it defaults to 300. But whatever the case, it got me short. And I never short into the 200. I never short into moving averages, much less the 200. But that's what this came from. I didn't even know I was in the trade until I got back in the car and I started looking. And I think we were somewhere in here. And I'm like, man, this is crazy. So I put in a target just under the 200, the 100 here. At the time, this was right around the 200. So I just put in the target and said, hey, if this thing sells through, I'll get in. If it pops back up, it'll stop me out again, and I'll just be done. But it did hit this target, and I was waiting for it to get to 96. I had no thoughts that it would get hung up here again. This is where it bounced the last time. And it got hung up here again. And I should have just taken it off, but I put the stop in. At this time, I had to go pick my son up. I put the stop in and, left. And damn if it didn't go up. Hit my stop. And then sold back off. Now, for the life of me, I can't see any reason in hell why it would do that. We're talking about 150 shares, so I know it wasn't seeking my order. It's not like I had 5,000, 7,000 shares here. I had 150 shares. And why it traded all the way back through these moving averages, made a higher high relative to this, because I put my stop just over the high of this. It took it out and then came back down and made the move I was looking for. 96 was my final target. So it took me out by a couple of cents, came down, hit my final target. Now, if I was still in here, if I wasn't on the road, I would have got back in right here and traded this down. But it's just a product of not being here. During the school year, I'm not here between 3 and 4, so I miss all of that. But this really, no reason this should have stopped me out. And I just feel like if I put it at 99, it would have touched 99 and took me out and then came back down. This is why a lot of traders feel that the market's just out to get them. But it's not, because I know they wouldn't be seeking a mere 150 share order for this. It just wouldn't make sense. But we ended the day with $102. It's a lot better than being red $400 and some dollars like we were last Monday. But just because the market halted didn't mean there was no trading opportunities. There was opportunities to make money today. Twitter, if you didn't like trading Roku, Twitter made an incredible run. I should have copied the chart, but I didn't. Made an incredible run. So you could have made money there. There are other stocks. Disney had a nice sell-off, nice setup, trend continuation. A lot of stocks, there are a lot of opportunities. It was just a matter of being patient and letting them come to you. And like I said earlier, I made the mistake in just talking myself into being too apprehensive this morning. Missed a couple of huge moves and then just got caught in some garbage here. But, going in tomorrow, we'll look and see what the market gives us. And it doesn't matter whether the market's up, whether it's down. I don't care. I'm going to trade what it gives me. And I'm going to be patient and wait for it to settle and give me what I'm looking for every day. That's how we consistently make profit and grow our account. So, guys, the trading dream is real. It's very real. You just have to trust the process. You have to trust the process. I have a process laid out step by step. All you have to do is trust it and give it a what else do you have? Now, what else are you going to do? And I'm here to guide you through it step by step every day. So it makes no sense to not take advantage of the opportunity that you have. You know, I don't do this. Obviously, I don't do this to get rich, not to teach. That's not why I do it. I do it because teaching satisfies something that I need in order to make my life complete. It's what I need to do. I need to share this. And in doing so, it benefits me. It helps me become a better trader. And it helps me to become a better teacher every day. So that's why I do it. But, you know, I'm not going to continue to beg guys that are in the community to take advantage of the resources that they have and trust the process. Because that's all you have to do. That's it. So I'm done for the day. You guys have a great night, a great evening, and we'll get back at this thing in the morning. You know, we'll see what it looks like when we wake up at 6 in the morning. And then kind of go from there. So take it easy. We'll see you.